please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to a fresh new edition of Trading Hour. It's a Tuesday morning. The markets are not doing very much. There's about a 13-odd point change on the Nifty. The Sensex is up about 36 points. And this comes after a really big rally we've seen across the board. The Nifty, for example, is up almost 300 points in the last 4 or 5 trading sessions. The Bank Nifty is up some 900 points. In a little bit, in a few more days than what the Nifty is up in. And you look at the mid-cap index, which has gone up about 800, 900 points as well from the recent lows. I mean, so, you know, it's a large move and we are doing, just about flat today. So quite understandable. 10,701. When we came into trade yesterday morning, you had this sort of tailwind of large drop in crude oil prices. So there was a significant change in the important variables that markets look at, and oil is right there at the top. This morning, I mean, it's more of the same. Overnight markets were shut. Oil is where it was day before yesterday, I mean, rather on Friday. So there isn't incremental change on the positive side to account for any more gains, at least at this point. But there's enough and more that we're tracking. Let me begin by welcoming my colleague, Ekta, who's, as always, with me here. Ekta, hi, morning.
Hi, Prashant. Morning. Well, a lot of stocks in focus. Just look at how the oil marketing companies continue their run. We have Larsen & Toubro, which is up around 2-odd%. And on the downside, it's something like Vedanta, which is off the day's low, but nonetheless still down around 2-odd%. And Bank Nifty underperforming, down 0.3% with the likes of State Bank of India, ICICI Bank, all of them underperforming at this point in time. But let's get talking about the technicals of the market. We have Sudarshan Sakhani joining in this morning. Sudarshan, hi, over to you then. What would you recommend on the Nifty, which is at 10,700, as well as the Bank Nifty, which is underperforming?
Yeah, good morning again. Well, the recommendation is that markets could be choppy today, and I have a sense that markets should face resistance, which means Nifty and Bank Nifty should face resistance at current levels. So for intraday traders, there is actually a short sell at current levels. Please understand that we are shorting in an uptrending market, but I think that trade exists. It is intraday. Individual stocks are mainly on the long side of the market, and that is the way it should be because it's a cheerful day. Otherwise, we start with Colgate. Colgate is part of the FMCG pack where a significant rally has taken place and momentum continues to be on the upside. So consider buying Colgate for the day. The second stock is Kotak Bank. Kotak is outperforming the broad, larger private sector banking space, and that should continue. So Kotak is the second buying opportunity. And the third stock I have is also a buy, Sun TV, after a long time. That stock had a fairly choppy, market traction, up, down, finally is going through a strong rally, and that's a buying opportunity. Keep these opportunities intraday.
Sudarshan, we will speak again. Thank you very much for your time at this point. So that is Sudarshan with his view on the market and trades, which are at the bottom of your screen as well in case you miss any of them. Let's get some F&O trades from Gaurav Bissa from LKP. Gaurav, good morning. What do you have?
Good morning. The first recommendation would be on Tata Communication. The stock has been trading in a range. It has now come out of the range. It's broken the crucial and immediate additional levels of 640, 645. Some more addition has already been seen. One can have a stop loss of 638, 639 on the upside. 660 can be seen. Again, next crucial level. Second recommendation would be buy on SRF. We saw significant short positions getting built and a very strong correction sort of coming in. It's now moving up on account of short covering, has broken the crucial resistance level of 1935, 1940. One can use a stop loss of 1930 on the upside. 2000 looks quite achievable in a day or two. Final recommendation would be sell on UPL futures for the reason that at higher levels it has seen unwinding. There's strong resistance at 725, 728 zone. Using 724 as a stop loss, one can sell it for immediate targets of 695.
Okay, all right, Gaurav, we're going to leave it on that note. Thanks very much for joining in and taking us through all of those strategies in the F&O space. A lot of stocks within the mid caps which are declining and have had a good session otherwise. So case in point would be something like a Just Dial, which is down 5%. But on a week-to-date basis, that is yesterday rather, that stock was up around 13-odd%. So just to give you a perspective, that stock is now declining after that strong rally that we saw yesterday. But let's move on to an exclusive then. Sources tell CNBC TV18 that the board of the insurance regulator, the IRDA, is likely to meet by June end and may consider crucial proposals for granting business approvals. Yash Jain joins in with more details on this. Yash, go ahead.
Well, absolutely. A series of crucial business proposals lined up for the insurance regulator's upcoming board meeting, which is scheduled to happen in the last week of June. Amongst the contenders, the most important one would be Sorrel Holdings. Remember, Sorrel Holdings is a listed subsidiary of the Indiabulls Group. What we're given to understand is that IRDA is likely to grant R2 or the second level approval to Sorrel Holdings for its life as well as general insurance business. Now remember, R2 is the most crucial form of approval because once the company receives the R2 or the second level approval, then going ahead receiving the final approval, which is R3, and then eventually starting its business operations is more procedural in nature. There is no board meeting required for R3 or no intense documentation which is really needed. So R2 becomes the most crucial one, and that is likely to be given in the upcoming board meetings of Sorrel Holdings. That is one part. Now, once the company receives R2, of course, it will have to deposit a minimum security amount of 150 crore towards both life and general insurance business, for which Sorrel Holdings just last month announced a preferential allotment aggregating to an amount of about 372 crore. So yes, that particular part has also been taken care of, and what we're given to understand is that if everything goes as per the plan, then by September or October is what we are looking at Sorrel Holdings actually initiating and commencing its life and general insurance operations. That's one contender. The other one, what we are given to understand is that Paytm, or rather the parent company 197 Communications, just a couple of weeks ago made a presentation to the insurance regulator expressing its intention to enter the general as well as the life insurance space. What we are given to understand is that they've also expressed the intention to submitting their papers for R1 before the next board meeting, and if that happens 10 days prior to the date of the board meeting, then those papers will also be considered for the grant of the first or the primary approval for 197 Communications, or Paytm, of course.
All right, Yash. Sorrel Holdings and Paytm both to be taken up by IRDA board when it meets in late June is what Yash is reporting. I mean, let's just quickly put the Sorrel Holdings chart, if you can, over the last 1 year, and you'll see what it has done. From 30 odd rupees 9 months back, it's at about 550 rupees. That is 15 or 16 times. That's the 12-month return. 1,540% returns. So this is essentially the company which will house, of course, pending approvals from IRDA, the insurance business of the Indiabulls Group. Well, we're moving on from one story to another one, and we'll have the next one flashing at the bottom of your screen in just a bit. So, as the Committee of Creditors nears the finalization of the sale of Ruchi Soya, the race has intensified, actually. Sources now tell CNBC TV18 that Adani Wilmar has revised its bid higher to pose more competition, tougher competition to Patanjali. Patanjali had submitted an offer, and now Adani seems to be bettering it. In a tough bid environment, lenders are also now considering the Swiss auction, the Swiss challenge method for value maximization. Nisha is joining in to give us more all the details here. Nisha, good morning.
Good morning, Prashant and Ekta. So, of course, sources with direct knowledge share with us. Now the focus has really shifted to Ruchi Soya. The IBC process is going on, and as Committee of Creditors are really nearing the finalization of who the front runner could be, Adani Wilmar has really upped its bid and has given a tougher competition to Patanjali. So now Adani Wilmar's total offer is of 4,350 crore rupees, and 1,700 crore rupees is the fund infusion in the company. Apart from that, Patanjali Patanjali, remember, we had reported earlier 4,100 crore rupees is their offer to the lenders, and 1,700 crore rupees is the fund infusion. So it is a little more than 250 odd crore rupees of difference. So that difference is not that huge. But remember that amount is not the only parameter of judging the winner in IBC processes. Of course, amount has a weightage higher than the others, but quality and other things also play an important role. So we'll have to see how the lenders really decide. But a very important bit that is really coming out in this IBC process, and remember, each of the IBC processes are clearly setting up a precedent for the future ones, is that in line with the value maximization agenda through the IBC processes, which is also coming out through most of these cases that are going to NCLAT and the Supreme Court, is that now the lenders are looking at a Swiss auction route in Ruchi Soya case as well. So now what they are doing for the first time in an IBC process is that they could be looking at the front runner. So between Adani Wilmar as well as Patanjali, they will come up with the front runner, make that the base price, and then open it to other bidders who have already been proved eligible by the lenders to really outbid this particular bid, the highest bid that they have got. And then the front runner will get an option of really matching the highest bid as well. So it is clearly going to be value maximization, but I do gather that it's not going to be open to everybody. Adani Wilmar, Patanjali will be able to participate in that bid process. We also gather from sources with direct knowledge that since Imami really entered the race at the last minute, their bid can also be submitted if they they are willing to participate in the Swiss auction process. But remember, this could be the first one of its kind and really be a very big landmark change in the IBC processes, and a case like an Ultratech Binani will not go to courts if this kind of a process will be followed in most of the other cases. But we'll have to see. There's not a tried and tested method in IBC process how it really goes on.
Okay, all right, Nisha. Thanks very much for that. So that's the latest coming in on Ruchi Soya. That stock up around 8.5% spike to the high point of the day. But just to put it into perspective, the 52-week high for that particular counter stands all the way at around 33 odd rupees. Discussing what's happening in the commodity space, we have Manisha Gupta joining in to tell us what she's looking at. And the first focus, in fact, is the farmer strike in Maharashtra.
Well, it is, and it's an all over India strike. While Maharashtra, of course, had begun it, but now we do understand that almost 110 farmer bodies plan a nationwide strike here. It has been in the news. We have been talking about it, but it just gets more stronger here as there was a farmers delegation that went to meet President Kovind yesterday, and they have asked for a special parliamentary discussion on the agrarian crisis. Well, remember, even as the government is trying to do quite a bit, it clearly hasn't helped the farmers as much, where we are looking at, while yet another year of normal monsoon, but the prices of many of the commodities are still on the weaker side, and especially because you have an election year coming in, the farmers protest, even say they see an opportunity here, and that is yet perhaps one of the reasons that you have seen the noises go higher. But the important point perhaps to note here is that come 1st of June and overall India, there would be no supplies of food grains, vegetables and dairy products as well, is what the farmers delegations have been saying. They have been asking or demanding for a lot of things. To begin with, it is about higher prices for their produce. A complete loan waiver without any conditions is something that they have been asking for, and small farmers be given equal remuneration as compared to the class 4 government employees is yet another demand that we have seen added into what they have been really asking for. So this just gets more serious right now, because we're just a couple of days away from that. The farmer association heads have been talking about this for the last couple of months, but they continue to push that on, and just a couple of days away, you really don't know how serious this perhaps could get, because earlier it was only Maharashtra and a couple of other states actually getting into this. But now we understand that it is 110 farm bodies which are planning a nationwide strike between 1st of June to 10th of June. Let's also get on board then Kunal Shah of Nirmal Bang Commodities to discuss more on that. Kunal, hi, welcome. Well, a third straight year of a normal monsoon, a very strong acreage numbers, expectation of higher crop as well. But clearly, we have seen a very volatile agriculture commodity prices. And on top of that, when you look at farmer protests being planned at a huge nationwide way, what is your sense on where the sector really is headed?
Yeah, well, over many years, every time agriculture commodity prices move up, and there is always some sort of intervention, and that has triggered this kind of rally. So, broadly speaking, the agriculture prices in for a lot of these exchange-listed commodities have not moved up, irrespective of the fact that there has been some shortage in some of the commodities also, but we've not seen. So, yes, the agriculture prices, most of the commodity grains, maybe oilseed, even for the same reason pulses, they are pretty low. So farmers are asking for the higher prices, but if the produce is high, if the quantity is, the production is higher, then I don't think it is in anyone's control to give them the higher prices. So in certain commodities, yes, but in most of the commodities, the produce has been, the production has been moving up, may it be pulses, may it be in the case of grains. So it is very difficult to get the higher prices considering the demand and supply equation. So let's see what is the outcome, but it is very difficult to just get the higher prices because prices are low. It doesn't work that way.
Oh, well, yes. But, you know, Kunal, we have a lot of these commodities being traded in the derivative markets as well. So a couple of days now, from now on, if there is, of course, it is a bit hypothetical right now because we still are a couple of days away from 1st of June. But if there is no produce that comes into cities and if the farmers go on a complete strike here on, how would you want to trade a few of these commodities then?
I think, yes, the prices will shoot up if the shortage is created. There is no price for the shortage in agriculture commodities. So if the produce starts, the arrivals drops in the mandis, then I think the prices of commodities like oilseeds may be affected. Even pulses for the same reasons can be affected going forward. So if the strike continues, yes, we are going to see some spike up in the prices of oilseed, in the prices of pulses.
All right, Kunal, we'll let you go at that. Thank you so much for joining us. So clearly a couple of days away from that strike, but we already have seen many of the agro-commodity prices run up, and we'll, of course, keep an eye on to what really happens on that nationwide strike from farmers.
Manisha, thank you very much. Kunal, appreciate you joining in with those trading ideas. As well, oil marketing stocks, by the way, the bottom of your screen are coming up a little bit. I mean, I think IOC is off the lows. HP, BP are other ones which are, I mean, they all had 5-6% days yesterday. Aurobindo Pharma is the other one, which is down over 3%. Fourth quarter earnings came in below expectations. Ekta, what's really the culprit here?
Well, you know, we had the conference call had an interesting chat with Rakesh Jhunjhunwala and the management. We'll just play that out in just a bit. But I just want to highlight a couple of key important points for Aurobindo this time round. It is really the injectables business which declined in Q4, and the company said it was mainly due to recalls which had taken place. So that impacted the US performance this time. And there was a sharp decline in the antiretroviral business, which was down over 40% on a year-on-year basis. Separately, the company did mention, and Prashant, this is very important, is that they've received an establishment inspection report for their Unit 4 injectables facility. However, the company did say that they will get more clarity on this unit once product approvals start picking up from this particular unit. So they are not saying that, yes, I mean, while it is positive that they've probably received an EIR, the proof of the pudding would be once they start getting approvals from that particular unit. So that would be something that I think will probably keep the market a little bit on the edge in order to assess when exactly that product approval would come out from Unit 4. Once it does, it's all in the clear. But nonetheless, that would just be a little bit of a concern, I think. But let's listen in to what Rakesh Jhunjhunwala had asked the management on the conference call, and we'll be back.
How will the interest cost be affected by the increase in, what kind of interest cost do we anticipate for 18-19?
Sir, this year we have, this quarter Q4 we ended with an interest cost of 2%. Our interest cost is predominantly foreign currency denominated. So depending upon the Fed rate hike in the interest rate, our interest cost also move accordingly. But it will be slightly below them because we are using other currencies also.
Right. So if the Fed rate goes up by 75 basis points, our interest cost should also go up by 75 basis points.
Yes, sir.
Right?
That's true, sir. It will be slightly below, but nevertheless it will be out that range.
And how do you expect the inventory and the working capital to increase next year? If you are planning for higher sales, that needs to higher working capital. But if your inventory is going to be normalized and you're carrying excess inventory today, what will be the increase in working capital next year? Suppose your turnover goes up by 15%. how much will your working capital go up?
Sir, we have if you see the balance sheet, we have on an average the working capital is around 40% of the turnover. If the increase in the turnover by about 15%, as you said, the working capital also will be similar or maybe slightly lower.
Then why do you, suppose I say your EBITDA grows, your profit next year say 2,400, I say 2,400, and you have depreciation rate at 3,200. If you have $175 million of capital expenditure, right? Why will your debt not go down further? Why it will go down only 100 million?
Sir, it is like this. When the turnover goes up by 15%, even though the working capital to turnover percentage remains the same, but the absolute amount will go up in line with the...
So the sale goes up by 2,000, your working capital go up by $120 million. So $300 million is your increase in working capital and capital expenditure. Your profit plus depreciation is $600 million. It's about $550 million. So why should your debt go down only by $100 million?
Sir, take the example which you said, if the turnover goes by $200 million and with the working capital ratio at around 40%, so the increase in the working capital may be $80 million.
And 175 is the working capital, so 250.
So 80 million will not happen. It may come down by around 60, 70 million. So that will be the incremental working capital required for the in absolute amount.
Right, so 250 million. But even if I take this year's interest, this year's depreciation plus profit after tax, it's about 3,200 crores. So then why should a debt not come down by $250 million?
So we said we will target not less than 100 million. That's what we said. We are not given an absolute amount.
No, sir, but then your target means this maths don't add up, Mr. Sipu. Then why you should target only 100 million? Either you're guiding to us wrongly.
Not like that, sir. We have not worked out the fine-tune numbers because, as we said, the year has come only 2 days back and we are working out how it is going to pan out on the new products and other things.